Welcome to The Explainer. Today, we're diving into something that's totally rewriting the playbook for business strategy. It's a new global standard that's forcing companies to actually prove their grand plans are ready for the real world, not just a fantasy.
I mean, it's the billion-dollar question, right? We've all sat through those presentations. You know the ones, flashy slides, big promises. But how do you really know if a strategy is built to last, or if it's just, well, wishful thinking? Turns out, the answer is usually hidden in the company's blind spots.
Well, that's where this new global standard, IFRS S1, comes into play. And trust me, it is a game changer. It's basically forcing companies to stop treating sustainability like some fuzzy side hustle. Now they have to connect it directly to their core strategy and, you guessed it, their financial bottom line.
So in this explainer, we're going to walk through the 6 key parts of this new rulebook. You can think of it like a complete strategic health check, one designed to show us which companies are genuinely resilient and which ones are just talking a good game. So, first up, what's the big idea here? Simple. The whole point is to give all of us, investors, employees, you name it, a clear window into how a company's leadership is actually thinking about the huge challenges and opportunities on the horizon.
All right, the very first step in this health check is to map out the territory. Companies now have to come clean about the specific sustainability-related risks and opportunities that could literally make or break their business down the road.
And this standard demands specifics, no more vague statements. First, they have to describe the risks and opportunities in detail. Second, they have to put a time frame on it. Is this a problem for next year or 10 years from now? And third, and this is key, they have to show how those timelines connect directly to their actual business plan. The age of empty promises, it's over.
So let's see how this actually works. For a car company, new fuel economy rules are a huge short-term risk, but that exact same pressure creates a massive long-term opportunity, dominating the electric vehicle market. It just goes to show you how one company's biggest threat can be flipped into its greatest strength.
Okay, so you've identified the risks. But the next crucial question is, where exactly is this going to hit the business? Where's the pain or the potential gain actually going to be concentrated?
The standard forces companies to map this out across their entire operation. They have to show us exactly where in the business model, from the raw materials in their supply chain all the way to the final customer, the impact will be felt.
So for a big clothing brand, the risk of water pollution isn't some abstract problem in a boardroom. No, it's highly concentrated in a very specific place, the dye houses. Pinpointing it like that makes it a tangible problem you can actually solve.
And you know what? It works for the good stuff too. For a biotech firm, the next life-saving breakthrough might not be brewing in their own labs. The opportunity might be concentrated in their R&D partnerships with just a handful of universities. Knowing that tells you exactly where to focus your resources.
So, we know the what and the where. The next logical step is, so what are you going to do about it? This is where we see strategy in action. And spoiler alert, it always involves some really tough trade-offs.
The auto industry is the perfect case study here. The action? Pouring billions of dollars into building brand new EV factories. The trade-off? A mountain of spending today for the chance to lead the market and avoid regulatory fines tomorrow. It's the classic short-term pain for long-term gain. And we see the same thing in agriculture. A farming company might shift to more expensive seeds that can survive a drought. The trade-off is pretty clear. Your costs go up right now, but you're buying insurance against a future where water becomes scarce and your harvest is secure. All right, now we get to the part that, let's be honest, a lot of people care about most. Show me the money. What are the real quantifiable financial impacts of all these strategic moves?
And this stuff is not abstract. For that clothing company, if they fail to manage their labor risks, that can mean a direct $5 million hit to the bottom line from fines and remediation costs. That's real money.
But then you look at the other side of the coin, the sheer scale of the opportunity. The car company isn't just spending a little pocket change. A $2 billion R&D investment is a massive bet on future revenues and growth from the EV market. And the financial pain from a misstep can be incredibly fast. A drug recall in biotech, that's a classic operational risk. And it can instantly vaporize $50 million in cash flow, just like that. It shows you how quickly a risk can turn into a crisis. And finally, we arrive at the ultimate test. It's one thing to have a plan, right? It's something else entirely to see if that plan can survive when things get really tough. Can the strategy actually handle the pressure?
For our auto company, the analysis gives them a clear pass. Their EV strategy is built to handle even tougher emissions rules in the future. They're not just reacting, they're prepared. That is the definition of a resilient strategy.
And for the apparel company, a stress test of their supply chain might show that because 80% of their material is certified sustainable, their whole operation is secure. They've built resilience right into the system, protecting them from future disruptions. And this really gets to the heart of it all. This new standard isn't just more red tape or a box-ticking exercise. It's a framework, a blueprint for building the kind of company that's not just more resilient, but ultimately more valuable. Which leaves us with one final question to think about. Now that you've seen this whole framework, from identifying risks all the way to stress testing the response, how would you apply it to your own world, your own company, your own investments? What hidden risks or maybe what game-changing opportunities would you uncover?